Now today's lesson we'll go over Fibonacci retracements. Now Fibonacci retracements are a very common tool used by technical analysis, and it's a very effective tool when used properly. Now firstly we'll talk about how to draw these lines. Firstly you want to click the Fibonacci retracement tool. I'm pretty sure any chart analysis software or your broker probably provides this. I would have thought it's a very common tool. And now what you want to do is find a trend that's either going upwards or downwards, and for this video we have a short upwards trend. And now for the upwards trend you want to find the highest point, which is right here, and obviously for downwards trend you want to find the lowest point, and you click the highest point and drag it backwards all the way down to the lowest point where the trend started, which is right here. Right, now as you can see should be a various amount of lines, and now what this is the 0% line. Basically that represents the highest point, and this line here is the 100% line. Now this line here is the 23.8% line. Basically what that means is once the price reaches this line, it has retraced 23.8% of the whole 100% movement. So it's retraced 23.8% backwards. Here it's 38.2%. Here it's 50%, so it's gone halfway backwards. And here is 68.2. Now these two are highlighted red because we believe that these are hit the most, and these are the most relevant ones because they create the strongest confirmation. Okay, so basically what you want to do is use these lines as a support and resistance line. Now as you can see, this when it dropped fairly strong, and actually used the 38.2 line as a resistance for a little while, support for a little while, come up to the 23.8% line and use that as a resistance, and then dropped way below, and then used the 50% as a support, broke the 38.2 quite a bit, and then come down and nearly touch the 68.2. Now you must remember that these lines are not exact lines. These are similar to support and resistance lines. These are our zones basically. So if it roughly touches it, that means that yes, it does as basically touch it. So for instance, as you can see, this line actually doesn't touch the 68.2 line, but we assume that it does because it's not obviously exact. Same for these. So it's just a rough area. And at this point we would actually expect the price to continue upwards, because usually when it hits the 68.2 line, it has two options: either shoot up or go down. Now as this is a very bullish candle, we think that the price would go up, and we would wait for confirmation, and it has actually gone up, and we did actually enter long around here, and it went up, broke the 38.2 and the 23.8 line. Now it's currently using the 38.2 line as support and the 23.8 line as a resistance. Now at the moment they should bounce between these for a while, I would have thought, but basically use these lines as a sort of support and resistance line and guidelines, and you can also use these lines for guidance as to where to set your take profit and stop loss. Now if this price actually did break the 23.8 line, that 23.8 line would transform into a support, and the 0% line would be the resistance, and the same applies if it went underneath the 38.2 line. It would use the 50% line as support and the 23.8 line as a resistance. Now, yes, that's it actually. On our next video we'll go on to talk about how we use this Fibonacci retracements in our own trading setups. Thank you for listening.